We are back at it again here with another video with the Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. All I ask from returns for to smash that like button to let me know you watch this video. Helps out the YouTube channel and lets me know you appreciate the time and effort I put into making these videos. So here we are with the SPY, the S&P 500 index, and we're going to talk about some key levels going on here within the overall market, the 10-year treasury, as well as what's going on with the overall picture, right? Because there's been a lot of volatility the last several days. Things have started to pull downwards. And today, the FOMC meeting had a lot to do with the volatility. But before we break it all down, I'm going to share with you guys the home run opportunity from the Discord that came from our Spybot that sent us direct notifications over at the Discord to have that edge within the volatility. So the opportunities I mentioned this morning turned out to give realistic expectations, 3 to 5%, 5 to 10% plus. And if you guys want to know about these stocks early on in the pre-market, check out the link down below in the description to the Discord. We look forward to having you join us and you'll become part of a growing community of investors, all looking to learn and grow together. So the home run of the day turned out to be our Spybot. Now, our Spybot had sent out a bear indicator since yesterday at 6 p.m. and it rolled over into today. And at the bell, the SPY continued to go lower and put options were up 4x to 10x within an hour, guys. And within the day, it gave multiple opportunities to maximize on. And this is our new release and resource that allows us to have an edge within the volatility of the markets to maximize on opportunities, whether stocks are going down or going up. And you can now join the members using this resource to maximize within the volatility, having that edge and clarity that they deserve and the edge and clarity that you deserve. The link is down below in the description to the 42 vision indicators, getting connected to the Spybot. We also have a QQQ bot and we have a Tesla bot on the way. It looks like we're going to release it this week and it's going to be awesome. And we have other bots on the way as well. We look forward to having you join us and let's jump into these charts. So here we are with the SPY, the S&P 500 index, and we're going to break everything down in today's video. What's been going on for the last several weeks and almost month, right? Within the upward trend, the downward trend, and what to expect moving forward and what the overall picture is showing based off 42 vision, because you definitely want to be aware of this information and stick around for it. So I'm going to pull up Ultimate 42 vision, the bull and bear indicators, which you can now gain access to as well. The link is down below in the description to the 42 vision indicators to receive the clarity and edge that you deserve within the volatility of the markets to maximize on opportunities, whether stocks are going up or going down. You can now join and gain access to this resource, just like every single member using it, to maximize within the volatility and maximize within the opportunities, no matter which direction, with that edge and clarity. So the SPY is under a bear indicator since yesterday on the 30-minute. It all started with Brainard's statements, right? Being slightly more aggressive, the balance sheet, and so forth. If you do some research on that, you'll find the information that Brainard shared, right? Then today was the anticipation of the FOMC meeting, and there's a lot of volatility because it dropped down, came back up, and then after market hours, it's just sitting sideways. So the question is, what is the bigger picture showing and what to expect moving forward? And if you really zoom out, the bearishness did not start yesterday. It started on the 30th of March. That was the first step, transitioning from March into April and leading up to all the data points, right? All these different data points that were released between the 31st, the 1st, all the way up till now on the 4th. And also 42 vision did a complete shift from strength, okay, that's green, goes down to green with red borders, then it goes to dark green with red borders, and then you get red bars, then you get that bear indicator as that extra layer of confirmation. And this right here is what you would consider the dip area, right? Based off 42 vision, white with red borders. Then the transition goes back up from white with red borders to red with green borders, dark green and bright green, and then you get that extra layer of confirmation of bullishness, and then it repeats the same transition back down from green to green with red borders, dark green with red borders, and red, depending on the volatility, and then quickly things start to go lower once it hits a dip area based off that extra layer of confirmation and the full move. So here we are in the dip area trying to transition back up, but now it went from red with green borders as if it was going back up, back down to red, and this can end up back down towards more white with red borders. Now when this dip area does appear, there tends to be a reversal. Now not every single one is strong, but others are stronger than others, right? And you can see it here. The last dip was right here on the 23rd and all the way back on the 14th. Those were the two last times on the 30-minute that we got white with red borders on the charts, and even down here, and then full strength for several days and weeks. And that's the edge that this gives us, right? And then we also get that extra layer of confirmation within the bull indicators and the bear indicators to see what's going on within the volatility. But it's simple as that, right? The dip area is white with red borders, the rip area is green, and the transitions happen to the upside and to the downside to be able to maximize within the moves. So right now we are in a dip area based off 42 vision, but it does not guarantee the fact that yes, this is just going to rip back up, because you could see what happened here, and you can also see there those little rips trying to go back up, and then it gets right back down. So when you see a bear indicator, we do not see strength until a bull indicator pops up like it did here, and it went from 451 to highs here of 456 in about 2 days, right? So on the 30-minute, we have a lot more volatility, and if we go over to the 10-year treasury, you could see how things have spiked up pretty fast as well. I mean, this 10-year treasury has moved quickly since March, all the way down here at 1.68, even at the 14th point right here when it was on 2%, all the way up to 2.5% so far. Now, it slightly came back down, but it's still skyrocketing very aggressively within the volatility, right? And then we also have oil to watch, right? And oil has had its moments going above $100. And here you have it spiking up as I'm doing this video, when it's actually going from a dip area back into a rip area. And as I do this video, we're going to come back to that and see how it performs and how it moves, so you guys can see how these transitions work, especially with how fast this is moving. So when you go back over to the overall chart of the S&P 500 index, we were looking at it on the 30-minute. But if you look at it on the 4-hour, you'll see how things have been under a bear indicator since way up here as well on the 31st. It all began there, try to come back up and quickly reject it and continue. No bull indicator within the process. So if this bear indicator continues to hold true and no bull indicator pops up, this will be dominating the chart overall. Now, if you pull up the 1 day, same thing. A lot of volatility. It is under a bull indicator, but things have quickly shifted to the downside. So if the 4-hour continues to pull down, the 1 day may go with it, and the 1 day eventually will have a bear indicator once again as these things start to cool off. And you can see here, based off the 1 day, right there you got the white with red borders, double dipped, right, double bottomed, and then it took off and it went into a rip area, full transition from white with red borders to red with green borders, dark green and green. And then we've been tracking this based off the 1 week, and if you actually look at the 1 week here, this has been under a bear indicator since January 24th, and throughout the whole volatility, when it came back up, no bull indicator popped up. And if we get wicks back down on these bars to the downside like it did here and continues, this bear indicator may not even get canceled out. It's going to continue to dominate within the chart. And we've known with 42 vision, and I started talking about it way earlier, way back here, January 10th, and every single moment forward, that we were getting closer to a possible bear indicator. And we stated if it popped up, things could be bearish based off the S&P 500 index for some time. And it's lasted about 3 weeks. And even though it tried to come back up, it is still now below those levels. And if it continues to the downside, it's going to continue to dominate the chart. Now, what I've always stated is, yes, we're watching this bear indicator. If it eventually gets canceled out by a bull indicator in the last several years, once that bull indicator pops up, we have a nice strong bull run for the next year or two. Same thing here, right after the 2020 pandemic March crash, and you could see how that bear indicator popped up, lasted several weeks and days, and then quickly came back up. And we've been tracking this all along within the volatility, and you could see how strong things were after that bull indicator. Now, based off history, if you go all the way back towards 2007, 2008, it did pop up, and within the volatility, it lasted to the downside for nearly 2 years. And same thing back in 01 and 02. So a lot of people are comparing the possibility of this type of market reaction to come if we were to go into a recession. Right now, I do not see that happening this year, but if we continue under a bear indicator for the next 3 to 6 months, well then that's starting to map out something similar to this or something similar to this. And then now we have to start watching carefully. But once that bull indicator pops up, you could see how strong things are for the next 2 or 3 years after that, and even up towards the next 5 to 10 years even after that. But every single time there's been a correction or pullback, that's what Ultimate 42 Vision gives us clarity on. And on the last 2 pullbacks, it's lasted several weeks to months. And once that bull indicator popped up, things went up strong for about a year to a year and a half. And right now, within this volatility, no bull indicator has popped up. And that is really what I'm looking for within this chart. If we can get a bull indicator popping up here within this chart and things get canceled out here, and then we can possibly have the next several months to a year of bullishness. I'm not stating that just because it happened here in 2019 and 2020 to 2021 and 2022, it's going to happen the same, but something definitely to not be overlooked and watched. But we are under a bear indicator on the 1 week. To receive clarity within the charts, check out the link down below in the description to the 42 Vision indicator, getting connected to the Spybot, the QQQ bot, and we're about to release our Tesla bot and many more on the way. Check out the link down below. Get connected to receive the clarity and edge that you deserve within the volatility of the markets to maximize on opportunities, whether stocks are going up or going down. You can now gain access to this resource and join the members using this resource to have that edge and clarity within the volatility to maximize on opportunities. As always, guys, thank you guys so much for watching, and let's make some money.